From the floor of the CME Group, this is Danny Riley on today's cash close or pre-cash close. And the name of this video, traders, S&P 500 futures and not your normal holiday. The high of the day came in at 209.440 mid-afternoon. The low came in at 208.83 half early. And last, we're 208.8870. We're up 4 handles on the day. Total volume is super low. We have a total of 615,000 minis traded and 2.4 thousand big S&Ps traded in the pin. Now look at the markets are eerie quiet. They've been that all day long. And what I first want to do is I want to send my condolences, my personal condolences out to all those people that lost their lives in France and all those people that were harmed by the bombings. Now, as we know, the markets have been making good of bad news. And I think that that's going to continue. I don't think that there's going to be a bombing over the Thanksgiving holiday. I think that the markets are going to react in kind on the upside going into Friday, and I think they're going to react again on Monday. But let's start this out. Anyways, we have a total of 615,000 contracts traded. When you take the 145,000 out from Globex, you have a total of 470,000 minis. When you cut that in half, you have a total of 235,000 minis traded in the day's session. That's not very much volume. And I want to point out that when I give the 50% for algorithmic or program trading, it's probably exponentially higher than that. Now, again, the CME is closed for the Thanksgiving holiday tomorrow, and then the markets are open for a half a day on Friday. Now, what we're seeing here is we're seeing this risk-off type trade in Europe, and it's coming over from overseas to our markets, and then it's being hit by also the Thanksgiving holiday. So we're seeing record low volume here today. In fact, the Dow Jones is seeing its smallest trading range of the year. Now, I know that last year that the SPX dropped 100 points in the first week or week and a half of December. But I don't think that's going to happen this year. Now, I'm not going to rule out that there can't be some type of pullback in the beginning of December, but I think that we've already had these event-driven lows that I keep talking about. And I think that actually has set up what we're seeing now, a push into the end of the year. Will the S&P go straight up? I don't think so. But again, as I pointed out, there's a lot of stops above 2089 all the way up to 2096, above 2098 and a half, up to 2112, and then up to 21, 24, 21, 22. I think this is going to happen. I don't think that we're going down. Now, look, as I said, I know that there was a big decline in the beginning of December, but as I said, I think that these declines have already happened, provided that there's not some type of terrorist activity or the Russians do something. And even then, I don't think the markets will stay down. There's too much mutual fund markups going into the end of the year, and you can see it in some of the stocks that we're seeing. But anyways, I'm going to leave it like this. I don't think that the S&P is going to get whacked going into the end of in the beginning of December. I think what we're going to be waiting on is we're going to see a gradual lift higher. I'm still looking at my S&P 2200 year-end call, and I do agree that there'll be some pullbacks, but not the S&P is going higher. I'll see you guys on Monday on the opening print.